All right, had to change my microphone around a little bit. Let's lower this audio a tad down to, yeah, it's way too loud on the audio. Music side, we'll keep our audio 100%. 100%. Bring this down a little bit. Welcome to Blockchain Tech and Finance with me, your host, KinToshi. If you're on the YouTube side, please do subscribe, turn on the bell notifications, and let's go right on into the market watch. I got short news today, and we're going to read through it and talk about it. If you're in the chat, you can throw your chat up there. Let me know what kind of news you're looking at and reading through, and it can be right here on the Jumbotron. All of these news articles are on the recap videos on the YouTube side, so you can watch the YouTube and do more research at your own due diligence of reading. Let's see what else is on the agenda. Possibly later on today, I'll be doing a bunch more recaps this evening and some more news readings that are from the prior week. It's been a busy week. Also, so yeah, basically the blockchain tech and finance. Smash the subscribe button. This is live every day, weekday at best when I can do it. And if you're into NFT artwork, search Kins Art on OpenSea and Foundation for my NFT artwork. You can follow me on TikTok, KinToshi.gg, follow me on Instagram, KinToshi.gg, and follow me on Twitch, KinToshi.gg, for extra gaming content and social creation content on the daily, weekly, all that jazz. Let's go. Oh, we got the Dow. Oh, sorry, what's up? One moment before we read the Dow. All right, now we're gonna read the Dow. Had to grab a couple things, hand them off on the other side of this. Blah 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 blah. We got the DJIF. We're in the futures market. Let's go to the U.S. Dow. We got the Dow up 0.1%, S&P 500 up 0.92%, the Nasdaq up 1.88%, the VIX up 6.57%, gold is down 0.52%, and oil is down 1.26%. In the Europe markets, we got the FTSE 100 up 0.3%, the DAX up 0.4%, the CAC 40 up 0.33%, FTSE MIB up 0.63%, the IBEX 35 up 0.49%, the Stock 600 up 0.24%. In the Asian markets, with the Asia Dow down 1.21%, the Nikkei 225 down 1.016%, Hang Seng up 1.7%, Shanghai down 0.13%, Sensex down 0.28%, Singapore up 1.01%. The FX markets and Forex, we got the euro down 0.67%, the yen up 1.15%, the pound down 0.58%, the Australia dollar down 0.43%, the DXY index up 0.9%, the WSJ IDX is up 0.6%. The rates markets, we got the US 10-year up 0.0702, Germany 10-year down 0.034, Italy 10-year down 0.0435, Spain 10-year down 0.0188, the UK 10-year is down 0.055, and the Japan 10-year is up 0.0114. In the futures market, with the DJIF is down 0.24%, S&P F is down 0.37%, Nasdaq F is down 0.57%, gold is down 0.54. Gold futures is down 0.54%, silver is down 0.56%, and crude oil futures is down 1.25%. In the crypto markets, we got Bitcoin $16,730 per BTC up to 0.214%. Ethereum and USD is $1,258.99 per ETH is up 3.48%. XRP is up 4.57%. 4.57%. Bitcoin Cash is up 3.65%, and Litecoin USD is up 0.95%, and Monero USD is down 0.22%. All right, so that's what we got there on the markets for the day. Let's get our first piece of news here. It's from CoinMarketCap. CoinDesk, not CoinMarketCap. This is after Bitcoin's worst week in 5 months. Here's what the crypto analysts are saying. A roundup commentary on how digital asset market analysts see the next few months unfolding. This is from Bradley Kuhn. I'm not sure, for writer for CoinDesk. we have this obnoxious ad on the top I want to get rid of. All right, let's go. Bitcoin fell 22% in the 7-day stretch through Sunday, and analysts are scrambling to assess the outlook for digital assets markets as well as possible policy ramifications amid an annus horribilis for the blockchain industry, freshly wounded by the FTX scandal. As the new week starts, the market is still researching a bottom. The CoinDesk market index CMI is down 0.8% over the past 24 hours. And here's a sampling of the commentary. And so let's see. Sean Farrell, head of digital asset fund strat. In the past 6 months, we have witnessed unraveling of a web of leverage that entangled the crypto space. It started with Luna, then UST seemingly resolved in the 3AC unwind, only to find that the SBF now appears to have been insolvent as well. Say it's appropriate to wait for lower lows, as there's good reason to think that there will be other casualties which could lead to forced selling or at the very least bad headline risk. Joe D. Pasquale, CEO of BitBull Capital, last few days have been have seen the space shaken by the collapse of SBF's empire. This expectedly, despite traditional markets showing some strength, BTC and crypto took a hit to poor sentiment. Even though BTC has settled around $16,000 for now per BTC, the extent of the damage to other companies, funds, exchanges is as yet unknown and may come to the fore in the coming weeks. Weeks to come. Yep. As before, we believe BTC under $20,000 is an attractive long-term accumulation zone, but we will remain cautious until the current situation is satisfactorily resolved and sentiment appears to be start moving toward relative normalcy. Notably, the last few days have seen a significant drop in exchange reserves for BTC and stablecoins. David Duong, head of institutional research at Coinbase. The relative crypto market stability in recent months was interrupted. We have seen broader market instability despite some positive macro developments for risk assets as a whole. It's still emerging which counterparties may have lent or interacted with either FTX or Alameda, and what those liabilities are. BTC could not only retest 2022 lows, but touch the 13K level. We think there is support for 13.5K. Arcane Research newsletter. This situation is a mess. One of the largest crypto companies in the industry was playing with customers' money, an embarrassment for the industry, but it also reminds us of what an unregulated Wild West this still is. The contagion from this will undoubtedly evolve over the next weeks. Yeah, FTX had only about $1 billion in liquidity or something, but like hundreds of billions in open positions or something that just couldn't be settled. Yeah, a mess is to say the least. The very minimal. Galaxy Digital newsletter. It's likely that FTX depositors who still have funds stuck on the exchange will be considered unsecured creditors and face a lengthy legal process. While several firms have proactively and publicly offered some transparency on exposure to FTX, the totality of industry exposure remains unknown at this time. An enormous amount of money is at stake, perhaps lost, but the impact of FTX's capital is even further magnified by exchanges' wide-range marketing efforts and Sam Bankman-Fried's prominence. The size of his advocacy and extremeness of his collapse cannot be understood and will have long-lasting ripple effects in Washington for crypto policy. GSR Weekly Crypto Recap. It's sad that 2022 in crypto hasn't been about the potential of crypto, but rather about leverage, greed, fraud, and lack of transparency, the very things the people involved accuse TradeFi of and vow to change. Pantera Capital's digital blockchain letter. In short terms, there will be pain for those who lost funds held on FTX. All right, let's talk about, more broadly, we expect further price volatility across the crypto ecosystem as fears of contagion drive asset holders to adjust their portfolios. Let's see, assets linked to FTX, Solana, and projects built on it, Aptos, etc., will likely be hit hardest. The episode will also probably be a setback for to adoption, as some retail users who lost funds choose to leave the space, and others who may have joined sooner are scared into staying on the sidelines. We expect are scared into staying on the sidelines. We expect institutions previously wary of the space to deepen their skepticism. So that's that there. After Bitcoin's worst week in 5 months, here's what crypto analysts are saying that we just stated through. Let's go on to the next article here. Yahoo Finance, global fintech blockchain market size to grow USD 8.7 billion by 2030. CAGR of 43.8%. Global fintech blockchain market overview. This is from Spherical Insights LLP. for Yahoo Finance. Global fintech blockchain market overview. The global market for fintech blockchain, estimated at 1.1 billion in the year 2021, is projected to reach a revised size of 8.7 billion by 2030, growing at a CAGR of 43.8% as per the latest research report by Spherical Insights. And consulting companies covered Accent, Amazon Web Service Inc., Bitfury Group Limited, BTL Chain Inc., Digital Assets Holding LLC, Earthport PLC, Huawei Technologies Co. Ltd, IBM Corporation, Infosys Limited, Liquify. All right, I'm not going to read through all these. Let's go. Global fintech blockchain market overview. The global market of fintech blockchain. I read this. Come on, man. Structure the article. Let's go. Blockchain technology is transforming operations in a wide range of industries, including finance. Blockchain and fintech are emerging as the most promising technologies, pairing with the potential to completely transform the fintech industry. Fintech blockchain, the application of blockchain technology in finance, provides solutions, software, and other fintech blockchain services that businesses may utilize to provide better and more automated financial services. The global fintech blockchain market is expanding because of factors such as faster cross-border payment systems, the need for cheaper, greater compatibility with ecosystems, rising consumer demand for Bitcoin ownership and investment in the financial services industry, and increased demand for comprehensive safety mechanisms. The rising power of buyers for Bitcoin, a larger need for faster, lower cross-border payment systems, greater interoperability with the financial services industry ecosystem, and a growing desire of comprehensive security measures are the primary reasons driving the fintech blockchain market's rise. However, problems such as ambiguous legal standards and frameworks, as well as the economic depression caused by the COVID-19 epidemic, have posed significant challenges to the fintech blockchain market's growth. The browse key industry insight spread across 210 pages, 120 market data tables and figures and charts from the report. Global fintech blockchain market size, share, and trends. COVID impact and analysis report by application smart contracts, exchanges and remittance, clearing and settlements, identity management, compliance management, KYC, and others by end users, small and medium-sized enterprises, SMEs, large enterprises by industry, banking, non-banking, financial, insurance. Global opportunity analysts and industry forecast 2021 to 2030 in detail, along with the table of contents. You can see that whole report. The market is projected to experience substantial growth throughout the epidemic as many governments establish fintech blockchain facilities. Many industries suffered significant financial losses because of the global pandemic, forcing many to embrace digitization in order to develop resilience. Because of the data pushed into supply chains is inaccessible and unreliable, an increasing number of firms are adopting blockchain technology for key financial operations. The pandemic is also fueling expansion in the fintech blockchain market as more individuals work from home, use telebanking services, telemedicine, teleconferencing, and use online and e-commerce payment methods, which will fuel growth in the fintech blockchain industry. The blockchain provides clear information about transactions with foster confidence because the department in charge of confirming the veracity of the claim and determining how much of the claim can be covered is always in need of a reliable repository of data. Because of the rapid growth of technologies such as IoT, the amount of data generated by the numerous linked devices is multiplying, necessitating the use of technology capable of managing a high volume of data. Insurance businesses also can be used. This obviously there's the real estate marketplace. So I want to jump around in this. Again, I'll have all these articles on the recap on the YouTube side. So key companies and recent developments. The report also provides elaborate analysis focusing on the current news and developments of the companies, which include product development, innovations, joint ventures, partnerships, mergers and acquisitions, strategic alliance, and others. This allows for the evaluation of overall competition within the market. Companies covered Accenture, Amazon Web Services, Bitfury Group. We read through these before, a little bit. Earthport PLC, Huawei Technologies. Obviously, the Huawei Technologies will be heard from more. IBM most definitely as well. Definitely Microsoft, Oracle. Yep. Ripple Labs probably. Let's see who else in here. Corn Group, heard that. Yep. Let's see. Global blockchain AI market size, share and trends. COVID-19. Why do I want to keep by technology? This is kind of. I'm gonna skip that part. Global blockchain AI marketplace. Yeah, that's pretty early on. AI and blockchain. It's there. It's just not really interconnected. That's a loose statement right there. Of AI and blockchain interoperability. It's happening, but it's just very early on in that stages. It's like an exploratory concept venture of research at this point by vertical BFSI IT technologies. All right, I'm gonna skip all this stuff, right? we got the main points here of certain key players in blockchain and the growth expectancy and overview here. Also some key points in a paper you can read through that's noted there as well. Let's go. Cointelegraph. U.S. lawmaker blames billionaire crypto bros for delayed legislation. This is the next article we have here. The collapse of FTX has raised alarm across Washington, D.C. The United States Congressman Brad Sherman, is a known crypto skeptic, has pointed the finger at billionaire crypto bros for slowing down much-needed cryptocurrency regulation. In a November 13th statement addressing the collapse of crypto exchange FTX, Sherman said the exchange's implosion has demonstrated the need for regulators to take immediate and aggressive action. The sudden collapse this week is one of the largest cryptocurrency firms in the world, one of the largest cryptocurrency firms in the world, has been a dramatic demonstration of both the inherent risk of digital assets and the critical weakness in the industry that has grown up around them. For years, I have advocated for Congress and federal regulators to take an aggressive approach in confronting the many threats into our society posed by cryptocurrencies, he added. Sherman announced his plans to work with his Congress colleagues to examine options for federal legislation, which he hopes can be carried out without the financial influence of members in the cryptocurrency industry. To date, efforts by billionaire crypto bros to deter meaningful legislation by flooding Washington with millions of dollars in campaign contributions and lobbying spending have been effective. We believe it is now important now more than ever that the SEC take decisive action to put an end to the regulatory gray area in which the crypto industry has operated, the senator added, while Sherman made a direct reference to former FTX CEO Sam Bankman-Fried and political donations to the Democratic Party. He also mentioned Ryan Salam, the co-CEO of FTX, who donated to Republicans in 2022. Bankman-Fried was also reported to have donated $39.8 million in the recent 2022 midterm election, which he said was distributed to both Democratic and Republican parties. The nearly $40 million figure made him the sixth largest contributor. While Sherman has also advocated for an aggressive approach to crypto regulation, Thomas Hook, a professor of cryptocurrency regulation at Boston University School of Law, recently told Cointelegraph that regulators should be looking to implement common sense regulation. Regulators are reacting to an industry that is evolving constantly, but overregulation could stifle that innovation. Poorly thought out regulation could create a twofold issue. First, it could limit U.S. consumers' ability to participate in the cryptocurrency ecosystem, and it could also drive these businesses to less regulated jurisdictions. This actually creates more risk for customers as it puts them in a position of dealing with less regulated institutions to participate in the ecosystem, he added. His comments, however, were made before the collapse of FTX crypto exchange. So now maybe it's just ringing even further true, right? Cointelegraph has reached out to Hook to understand if his position has changed in light of the news events. I don't even know what happened with that completely with FTX. We're still exploring that. But maybe in my speculation, as part of it had like staking options of FTX. So many people had open staking options that were kind of being drawn out, and they just couldn't leave from those staking option positions because there's just not enough liquidity to cash out those positions. Well, I don't know. Maybe that's part of it. In my mind, is what's going on here. Meanwhile, Shark Tank host and millionaire venture capitalist Kevin O'Leary stated in a November 11th interview with CNBC that U.S. regulators need to start with one thing rather than regulating everything at once, with the investor recommending Congress start with Stablecoin Transparency Act. O'Leary said that given the recent events at FTX, he believes institutional investors will likely put a pause on deploying serious capital into new investments until a legitimate regulatory framework is set in place. That would signal to everybody around the world that regulators in the United States are taking crypto on, starting to put the rules in place, putting the guardrails on. No one is going to play ball in this space on an institutional level with serious capital until we get it done. Among the most notable cryptocurrency bills to have been introduced to the U.S. Congress include this Central Digital Currency Study Act of 2021, the Digital Commodities Consumer Protection Act of 2022, DCCPA, the Stablecoin Transparency Act, and the Cryptocurrency Tax Clarity Act. Future bills will enter around President Joe Biden's executive order in March 2022, which will include bills aimed at improving consumer investor protection, promoting financial stability, countering illicit finance, and improving the United States standing in a global financial system, financial inclusion, and responsible innovation. So yeah, most definitely, more is going to be released. There's from Braden Lindria, writer from Telegraph. U.S. lawmaker blames billionaire crypto bros for delaying legislation. Let's see here. All right, this next article here, let's keep going. One way to look at crypto from a macro investor's perspective. This is from writer Sam Rowe, contributor at Yahoo Finance. This video to stop trying to play, bogging the stream down every time. Let's go. Stocks rallied last week with the S&P 500 surging 5.9%. The index is now up 11.6% from its October 12 closing at 3,557.03 on the S&P 500, down 16.8% from its January 3rd closing high of 4,796.56 for S&P 500. The big driver in the recent market move was Thursday's cooler than expected consumer price index CPI report, which was followed by one of the biggest single-day stock market rallies in history. But with last week's sudden and spectacular implosion of crypto exchange FTX, I thought I'd share some thoughts on cryptocurrencies and blockchain. Ever since Bitcoin made mainstream news about a decade ago, I've done my best to read up on cryptos and blockchain technology. Unfortunately, I'm not sure I totally understand what the big deal is. I believe blockchain represents a technological breakthrough, and I'm convinced there's some value in being able to own and exchange digital objects that can't be copied. I'm just not convinced there's an urgent need for any of this. If there were, I think there'd be much wider adoption, but the individuals and entities going all in on cryptos and blockchain are largely detached from anything that matters to me. That said, I'm not convinced that cryptos and blockchain will never matter. There may be a day that the technology becomes central in how assets and information are exchanged. But I also don't think you need to own a bunch of today's cryptocurrencies and invest in today's blockchain companies to benefit. If the technology is indeed all it's cracked up to be, then everyone should eventually gain from cost savings and reduce frictions across the economy. Yeah, and also a lot of it has to do with the economy itself. How many people are really venturing out of the box on things rather than just getting the milk, eggs, and the bacon and bread on the table? Not so much bacon on my end. I don't eat bacon, but as far as the price swings of cryptocurrency are concerned, here's an analogy that I think I'm happy with. Blockchain is like the internet. Like the internet, cryptocurrencies are like websites. During the advent of the internet, there were lots of internet companies you could invest in, and there were lots of websites you could visit. Today, everybody uses the internet, and everybody visits a lot of websites. But a lot of early internet companies have gone bust, and a lot of yesterday's popular websites aren't popular today. Maybe some of today's cryptocurrencies will become tomorrow's Amazons or Googles, but many will also go down like Pets.com or Webvan. Quick note about fraud. Anything that looks like financial opportunity is going to come with a lot of crooks who will take advantage of those attracted by the prospect of getting rich quick. But the existence of crooks in the crypto world doesn't necessarily mean that crypto itself is problematic. It just means that there needs to be some more education and probably some regulation. Yeah, most definitely. I mean, the stock industry was really no different, and like fraud stocks and fake companies and all that stuff. In summary, I think blockchain technology is interesting, but I don't think the need is urgent. And just because you don't own a bunch of cryptocurrencies and you don't invest in a bunch of blockchain companies doesn't mean you won't benefit should the technology become widely adopted. There are a few notable data points here from the last week to consider. Inflation cools a bit, right? We just kind of read about that a little earlier. The monthly core inflation declined in October. Core goods and services CPI, the rent of primary residence, aka tenants' rents and owner's equivalent rent, how much a homeowner would have to pay rent for the currently owned home, cooled a bit as they catch up with the decline in market rents. Let's see, consumer sentiment is deteriorating again. Is this really, let's kind of get out of this, high interest rates falling, decreased most sharply in November. Consumers are taking on more debt. Let's see, credit card rates are rising. Personal bankruptcies are ticking up. My daughter's crying in the background, fighting with her other siblings. Consumers still expect to shop this holiday season for stuff, for gifts and whatnot. Let's see, what else is going on here? Holiday sales are off to a slow start. Unemployment claims remain low. That's not a bad thing. Small businesses say labor shortages continue, but overall hiring is kind of up. Putting it all together, while inflation appears to be cooling, it continues to be a very hot spot. So we should expect the Federal Reserve to continue to tighten monetary policy, which means tighter financial conditions, i.e., or example, higher interest rates and higher lending standards and tighter lending standards. Sorry, all this means the market beatings will continue, and the risk the economy sinks into a recession will intensify. I mean, we're like on that path. In the matter of recession risk, consumers are increasingly stretching their finances to maintain their spending. They're accumulating more debt and growing. And a number growing of these folks are entering bankruptcy. Let's see. In closure, overall, any downturn won't turn into economic calamity, given that the financial health of consumers and businesses remains very strong. And as always, long-term investors should remember that recessions and bear markets are just part of the deal when you enter the stock market, and with the aim of generating long-term returns. While markets have had a terrible year so far, the long-run outlook for stocks remains positive. All right. That's a lengthy little piece of Yahoo Finance there. But in brief, one way to look at crypto from macro investor perspective. If you got anything out of that, let me know in the comments there on the recap video on the YouTube side. There's a little all over the place, but we'll take it. I'm going to close out the article with this. Drone taxi takes the first spin in the air traffic near Paris. This is from the tech sector. And routers, whatever this is. I don't know. Is it routers? Someone tell me. Is it routers or routers? I'm going to say routers. The Volocopter test aircraft, which resembles a large drone with 8 rotors, took off with a passenger on board from Pontoise Cormeilles airfield outside Paris. An electric helicopter with multiple rotors took its first flight in conventional traffic near Paris on Thursday as it prepares for commercial flights from 2024. Wow, this site is up. It's get the ads out of here and start like having a little bit of. Get all these ads out of here. Like no one can read your site. Like now you want me to subscribe? Just further bogging the site. I just want to read the news. Come on, let's go. Just off of here. The Volocopter test aircraft, which resembles a large drone with rotors, took off with the passenger on board from Pontoise Cormeilles airfield outside Paris and briefly circled around while other aircraft vicinity. German company Volocopter's CEO Dirk Hoch said that in the next 18 months it will prepare craft for certification, and said he hopes to launch short flights by 2024 when Paris holds its Summer Olympic Games. The company wants all right. I just had to take a pause for a moment. There's too much like yelling and noise in the background. I had to take a stop for a second. And this site is absolutely slow. Get the ads out of here. No one cares about this ad crap in the way. Oh, we're just looking to read the article. The company wants its 2-seater aircraft to eventually take to the skies fully automated with only passengers aboard, but admits that a lot of work is still needed in terms of infrastructure, airspace integration, and public weapons. I mean, when you got an ad right here, you got the same ad on either side of my banners. You got like more ads on the side. You got a bunch of crap over here on the side. It does not help your site from people staying on your site. You got to null down the ads. Null down the ads. I don't even want to read this anymore. Yeah, but I'm going to. In a helicopter, when you move one control, 3 things happen, and it's like patting your head and rubbing your tummy. It's a coordination exercise. In this aircraft, they take away all that difficulty in it's very simple controls in each axes. That's what makes it easier to fly, he said. The president of the Ile-de-France region around Paris said the region provided financial support for the initiative, as she wants the first passenger flight, vertical takeoff and landing aircraft to take place here. Development of a low altitude aviation for urban air mobility venture full of promises, she said in a statement. Volocopter is in a costly race with companies around the world, including Joby Aviation and Airbus, to have the first flying taxi certified by regulators. It is aiming to achieve this in around 2 years. So yeah, 2-3 years, we're going to see some flying helicopters flying all over the world and what have you. There it is right there. Drone taxi takes the first spin in air traffic in Paris. That's all I have. I'm going to close out the stream for the day. I'm going to be back in the latter afternoon, in the evening. our sources here. Just take out the source. That one site, man, is just absolutely terrible. Take the ads out so we can actually have a news stream. All right. All right. Sorry, but not sorry. If you're on the YouTube side, subscribe, turn on bell notifications here to blockchain, tech, and finance, and playing tornadoing children in the background and my family and kiddos. All in good fun, right? Again, I will be back more in the evening. I have like 4 more videos I'm gonna be making of a past week of news. It's just like making videos in the mid of like a meltdown is almost like I'm just gonna go do something else. Like I was watching like 20,000 people sit on Twitter, with Elon Musk hanging out there, 18,000 people for like 5 days straight talking about the FTX thing on some other Twitter spaces. And it's just like at that point, you're just rolling around your mind in circles. I'm gonna go spend more time with family, right? Things like that. Look at more artwork. Just kind of roll around in my own mind about what I'm looking to better and accomplish. So have a great and safe day. Cheers, ciao, peace be with you. I'll be back with a bunch more news here on Blockchain Tech and Finance. Take it with a grain of salt. We don't even call it news anymore because everyone hates the news. So we'll just call this Blockchain Tech and Finance, where we look at articles of news, put our own spin on it. Cheers, ciao, peace be with you. Stay safe, stay well.